So we have Alcoa reporting as well. Slightly smaller than expected adjusted loss, a miss on revenue, adjusted EBITDA down 14% versus last quarter. The company saying increased tariff costs, unfavorable currency impacts playing a factor there. Trade policy also impacting guidance. Tariff costs on higher U.S. imports of aluminum from Canada are expected to increase by approximately $50 million sequentially, quote unquote. And we're going to dig more into the quarter in a First on CNBC interview coming up right here on Overtime just a little bit later on the show with Alcoa CEO William Oplinger, and that will be before the earnings call. And if we look, shares of Alcoa are also in the red right now, down about 1.5%. Barb, I want to get your reaction to all of this, whether it's IBM, which has been a high flyer this year, or whether it's Alcoa, as we have talked about, the industrial part of the economy and this big focus on things like critical minerals.
Yeah, well, IBM is interesting. I'm not surprised it's down because the expectations were very high, or hopeful, I should say, in the software. Because IBM have seen it's not only is it at new highs, but it's historically at a much higher PE than it normally would be. You've seen an expansion this year, and that's because they are viewed as having successfully changed their mix shift, going to higher recurring revenue model where over 50% of their total revenues are recurring, and a big part of that is the software story. And as you had mentioned, or someone had mentioned earlier, they've missed Stephanie and LinkedIn on the last show that they had been a little bit soft in the last quarter. In fact, it's been the last 2 quarters in software. So people were hoping for a little bit more than a meet, and they did meet expectations. But I think that's the issue here. Where do they go from here? Looks like business is solid, but we're waiting to see. The Gen AI has been accelerating, but that's still a small part of their business. So we want to see. But I think the IBM reminds us that AI is such an important part of the story of so many of these tech names that if that is not as strong or as leading or accelerating, it's a problem for the stock. So I think there for IBM. And Alcoa, of course, is a commodity play. And commodity plays, there's no barriers to entry. It's really about cost control and also demand at a given moment in time. And of course, Alcoa is interesting because they do have this critical minerals play with the gallium that could happen, and they could be up in production as early as 26. And that could be interesting. It could be a higher margin business. They could have some pricing power there. So we'll see how that plays out. So that's a very interesting thing for them to go forward with.